right, let's get you much more news right here on Bloomberg TV India. Tech Mahindra's second quarter earnings have beaten analyst estimates. Profits rose 16%, while dollar revenues jumped to over 1,000 million. Bloomberg TV India's Shilpa Ranipeta did manage to speak to the management and began by asking them about the outlook for the second half of the year. Here's that conversation.
Qualitatively no different from the first half. So I think the economic conditions will continue to remain more or less the same. But one thing about making such prediction is that you can often go wrong. But by and large, I'm quite happy with.
And compared to, if you look at it compared it to the second half of last year, how much better do you see? Do you see it much better this second half?
I think the conditions movement is always there. But what has happened is that I think we are better prepared to handle it now, as we did this time. And you see the results in the numbers.
Tell me, what is the pricing and volume scenario like? Throw some light on that.
I don't think really there's any major movement in terms of pricing either way. It's a more or less similar scenario.
And if you could tell me what contributed this time to margins, what really contributed, if you could give me a breakup of that.
So the currency tailwinds were about 60 basis points because INR depreciated. Then in last quarter there was a visa cost, which was H1B visa cost, which was not there. So that was about 80 basis points. We had the improvement in utilization as well as some other optimization measures that we have taken. That contributed about 150 basis points. The transition cost increase was about 30 basis points. Our SG&A cost increased by about 100 basis points. 50 basis points of that was some initiative which is only be one time. But so that's about net we had about 160 basis point increase in EBITDA.
And tell me a little about utilization levels and going forward, what do you think needs to be done to improve the levels of utilization?
So, currently, our average utilization including trainees improved by about from 74 to about 77 basis point. From 77%, maybe we may be able to take it closer to 80%. But so I think beyond 80, you have to, it's often balancing between the growth and improved utilization.
Mr. Vineet, you mentioned that America continues, in terms of geography, continues to be a growth driver. But you also spoke a little about Europe being a cause of concern. Can you throw some light on that? And and going forward, do you see America leading the growth?
Well, as everybody knows, at this point of time, American economy relatively is booming. The demand is high, and therefore there are bigger opportunities there. But on the other hand, in Europe, where there is an element of stagnation, opportunities are not necessarily low there because we can provide low-cost solutions to the various enterprises, and therefore, in fact, our demand increases. So, net, I don't see a major decrease in opportunities. The only thing is identifying them and securing them for yourself.
And how do you see revenues, segmental revenues, if you were to talk about them in terms of communications, in terms of tech, in terms of media, if you could break that down?
So both communication as well as enterprise vertical, as we call them, have grown in constant currency term at 3%. So it's been really a quarter where the growth has been really balanced in both the verticals.
And going forward, how do you see it for the second half of the year?
It's difficult. As you know, we don't give guidance. But second half, the first quarter, third quarter will have a typical problem which comes because of furloughs. Difficult to estimate, but as Vineet said, we are really better prepared as compared to last year to address the issues.
All right, so the companies Milind, Kulkarni and Vineet Nayyar speaking to my colleague Shilpa Ranipeta just a while ago. Meanwhile, in another space, GAIL posting an operationally subdued quarter as an